Hey, what is going on, everyone? Welcome back to the channel all about real estate. My name is Lewis, and in today's video, we're going to take a look at what real estate experts are saying is in store for us in 2022. I recently received an email from a company called Stessa. It is their weekly newsletter, and they basically hand curate a bunch of data, statistics, trends with regards to the real estate market. And this email had some really insightful and valuable content that I think would be really fun to share with you here today. Let's go ahead and jump right into it. So real quick, before we get into the data, for those of you who have never heard of Stessa before, it's actually a real estate management software that allows you to easily track your income and expenses. I have absolutely no affiliation with this whatsoever, but the system itself has been really easy to use. I've used it on my rental properties. It's free up to a certain unit count or a number of buildings, and then they have some price structure after that. But anyways, it allows you to link to your bank account, track the income and expenses. It has a little dashboard so you can track the property's value, the amount of equity you have, the cash flow. It's super simple to use. It's really easy to classify, and then you can literally jump in, log all of your reports, pull a P&L, extract all the data. Anyway, so I'm a huge fan of it. If you haven't seen or heard about it, it might be worth checking out. All right, so with that said, let's go ahead and jump into what is in store for 2022 according to these experts here. So the article says that this has been a very interesting year for real estate, which most of us are aware, obviously. We had lockdowns, moratoriums, forbearances, limited supply, record price increases. I mean, the list goes on and on. So let's take a look at what they're saying here. Brenda Richardson of Forbes pulls from a number of real estate commentators who have something to say about 2022. So the chief economist for Realtor.com, Danielle Hale, says, "We expect a whirlwind 2022 for the housing market. Home sales are expected to increase another 6.6%. Home prices are going to rise by 2.9%, and that'll be on top of the 2021 highs. And we'll see a gradual uptick in mortgage rates, which will make affordability a top consideration for home buyers, especially the millennial group, about 45 million people that are between ages 26 and 35, and they are at the prime first-time homebuyer age." So if we unpack that a little bit, she's saying that the actual sales activity is going to increase by about 6.6%. And then we'll see home price appreciation right around 3% for the year. In 2021, we saw price appreciation close to 20%, which was very unusual for the real estate market. 3% price appreciation is a lot more on track with a historical average or a more quote-unquote normal market. And with regards to millennials, that is a large demographic, a large population of people who are starting to work their way into that prime first-time homebuyer age. And as we dig into the data, it shows that they've been putting off purchasing a home due to affordability issues or student loan debt or credit card debt, things like that. Well, those folks are now kind of in their prime working years. They're earning more money, and they're getting to that prime age where we start to see more household formation and home purchases. So the next expert, Bob Pinniger, president and CEO of the National Apartment Association, says housing affordability will remain a key issue as the nation's rental housing market tries to stabilize from lingering pandemic and housing stock issues. Supply chain delays and continued inflation will also impact every facet of the industry, from property managers to renters to owners. So he doesn't really give any specific information here. He's just saying that affordability will be an issue due to the supply chain issues and inflation, meaning the cost of home ownership increases, the cost to run and operate a property increases, things like utilities, and then of course the cost in goods and services have been certainly rising alongside of inflation. So the next expert, chief economist of Redfin, Daryl Fairweather, says, "After 2 years of unprecedented uncertainty in the housing market, we're expecting 2022 to just be an unpredictable. We expect 30-year fixed mortgage rates to slowly rise from about 3% to 3.6% by the end of the year, mostly attributed to the pandemic subsiding and inflation continuing to linger. Moving on, let's take a look at price growth here. They have a really nice chart from Fortune and shows the United States home price growth year over year. You can see as we go back to January 2019, we were under 5% price appreciation for the year. And it's slowly kind of hovered from maybe 4 to 3% on up to about 4%. And it started to get into the 5% range. That was right around maybe April or June of 2020. And we've seen a major shift in price growth over the last 18 months or so, where we've seen double-digit price appreciation all the way up as high as about 19.9% in August of 2021, where it sort of peaked out. So major price growth over the last 12 months. Redfin is forecasting price growth at about 3% at the end of December 2022. Realtor.com is forecasting about the same at 2.9%, as we mentioned above. If in fact we do see that price appreciation around 3%, it's probably going to be what we would consider more of a normal market. This article goes on to say that price deceleration is primarily due to a rising interest rate environment. An inflation-concerned Federal Reserve is now likely to raise rates. This is something we've already talked about. We do expect it. Realtor.com foresees the current 30-year fixed rate moving from 3.1% to 3.6% by the end of 2022. Rising rates, of course, would put downward pressure on price growth as it raises the cost to buy and locks some buyers out altogether. So it sort of decreases the affordability, and it may push some of those potential home buyers out of the market and keep them in the rental market. Now, some of the economists at Realtor.com, they offer a number of predictions. So the first couple bullet points we've already talked about, that's price appreciation of 2.6%, increase in home sales of 6.6%. But a couple other items here, which I thought were interesting, is they believe that rents will outpace home price growth in 2022, meaning that rental rates are going to grow more than 3% annually here moving forward into 2022. I would happen to agree with that. We're already seeing that in our market over here, Northern California, Sacramento region. Last year, I think we saw anywhere from 7 to 12% rent growth, depending on the type of property. Multifamily had, apartment buildings had a huge swing. Single family rent growth was massive. And so I believe that as rates rise and with the amount of competition in order for first-time buyers to get into these properties, I think some folks are just saying, you know what? Let's wait for some of the madness to calm down a little bit. Let's just continue renting for the next year or two and see how things pan out. Inventory strains will begin to ease with more permits and construction. So they are expecting that we will see new construction come online. So more of these home builders are going to continue building, which will bring more inventory, which will allow more people to purchase homes. Because right now we do have a major issue, not just nationally, but also here in California. There's just a very small amount of inventory available for those who want to purchase an existing home or even a new construction. This is just anecdotal evidence, but with some of the new home builders out here, they're doing pre-sales. They have lists that are 40 families deep, and it's very challenging to get into even new construction at this point. Whereas in the past, that used to be a lot less competitive. People would opt out of purchasing an existing home because they could easily purchase a new home. They wouldn't have to deal with bidding wars and things like that. It goes on to say that a preference for the suburbs will remain. I believe this to be true as well. Less people are going to be living in that urban environment, or there'll be a lower desire. I think mostly because there's a lot of people working from home, and they would much rather be able to distance a little bit more, have a little more space, have a yard. They're not eating out as much or spending time in bars and enjoying some of the entertainment that some of the urban and city areas would allow you to do in the past. And then the last bullet point here is it says first-time homebuyers will continue to struggle amidst high prices. So this is something that has been a challenge in this market for the last couple of years. There's not a lot of inventory. Prices are increasing rapidly. At least that's what we saw over the last 12 months. So it's been extremely competitive, particularly for the first-time homebuyers. Are competing against cash buyers. They're competing with people who are selling real estate and taking a tremendous amount of equity and rolling that into their new home. And then, of course, we have the rise in prices, which is making it less affordable. And, for those that are out there renting, as their rental rates go up, it takes away from their disposable income, which means their savings rates generally go down a little bit. So making it a little bit more challenging to save for a down payment and closing costs and things like that, so they can go ahead and get into their first home. Okay, so moving on to interest rates, Eric Martin of Mortgage Reports interviewed 7 real estate industry experts. Based on their predictions, they determined that demand will continue to be strong in 2022 as millennials and other demographics still value home ownership. Further, home value appreciation may decelerate, but will continue to rise amidst a supply and demand imbalance. And as far as interest rates go, they put their predictions here in this chart. So some of their predictions are anywhere from 3.25% to 3.5% to 3.625% to 3.7%, as high as 4% by the end of 2022. That, of course, would be a 30-year fixed rate mortgage, and it's just a forecast where they think it could potentially go. Now, moving on to inventory, up on the screen we have a chart, and it is the single family homes, the total amount for sale in the United States. It dates back to July of 2015, and you could see that at the peak in July of 2015, we had about right at about 1.1 to 1.2 million homes for sale nationally. It has some peaks and valleys over the last couple years, but the trend has been down. And so as of right now, we're currently sitting at about 350,000 units on the market for sale at a national level. This is a record low, so very, very low amount of inventory right now. Now, because of this low inventory, I believe this is why some of these industry experts are saying that even though we'll see less price appreciation, we'll still see price growth, because there is just so few homes for sale, creating a major demand. So we have tons of buyers that want to purchase, but we have very, very low supply. And in the grand scheme of things, even in a rising interest rate environment, they are still historically super duper low. And now this chart actually shows where the 30-year fixed mortgage rates here are on average in the United States. This one dates back to sometime in 2006 when rates were hovering at about 4.2%. We've seen them come down dramatically, and we saw a couple little peaks and valleys, but as of right now, we're sitting in the low 3% range. So historically speaking, they are still very, very low. Even if some of the predictions here are correct and they jump up to maybe 3.5%, 3.7%, that's still going to be lower than what we saw in 2006. All right, so that's going to do it for the Stessa newsletter. We touched on all of the key points, but in summary, the experts are predicting that mortgage rates are going to rise to about 3.7% on a 30-year fixed on a primary home. They do anticipate that price growth on a single family home will be somewhere around 2.9 to 3%. So the price growth will be a lot more mellow than we saw last year. They are not forecasting that prices will come down, but they do anticipate the growth to slow, and they are attributing that primarily to the rise in interest rates, which makes it less affordable to purchase. They say that the millennial age group still values home ownership, which I agree with, and they're getting to the age where they're really considering starting families and going out to purchase their first home. And for those that are out there in the market, they are having a harder time right now because rents are still growing at high levels. The experts are saying they do expect rent growth to be higher than price growth this year. We're still seeing record low inventory. They don't anticipate that changing, although they are saying that new home construction is likely to increase, and that will bring a little bit more supply online, but we still have a massive inventory issue. So that's going to wrap it up for today's video. I would love to know your thoughts on the real estate market for this year. What are your predictions? Do you think rates are going to go up? Do you think home prices are going to go up? Do you think we're going to see more inventory come online? Leave your comments below. And if you haven't done so already, please consider liking and subscribing to see more weekly videos on finance, real estate, and investing. Again, my name is Lewis. Thank you so much. Take care.